I used to think the gold market was a dignified place, a realm where central banks, jewelers, and bullion dealers transacted based on genuine supply and demand. A place where price moved because someone needed to hedge, deliver, or diversify. How quaint. Then I started trading it. What I discovered is that beneath the polished veneer of the gold market lies a battleground teeming with sharks, spoofers, and algorithmic predators. It's less of a serene exchange and more of a high-stakes poker game. Except the house has a PhD in behavioral finance and an army of bots sniffing out retail fear like blood in the water. Let's start with spoofing, the art of placing massive orders with no intention of executing them, purely to trick the market into thinking there's demand or supply. It's like shouting fire in a crowded theater just to cut to the front of the popcorn line. Example? Look no further than JP Morgan, whose traders spent nearly a decade playing the precious metals markets like a piano, layering fake orders to move price and triggering stop losses for fun and profit. The result? A tidy $920 million fine, which sounds like a lot until you consider how much they probably made. No criminal charges, just another day in the financial Hunger Games. And then there's Andrew Maguire, the whistleblower who exposed manipulation in the silver market, watching in real time as massive sell orders were dumped to create panic, only for the same players to scoop it up cheaper seconds later. This isn't conspiracy theory. It's documented market behavior. Why retail traders are so often the punchline. The average retail trader is taught that the market is logical, efficient, and maybe even a little fair, which is adorable. What really happens is this. Large players, institutions, market makers, and liquidity providers spend a non-trivial amount of effort figuring out where retail money is sitting. They want to know who's long, where are the stops, where is the obvious breakout entry, and then they trigger those levels on purpose. Enter the bull trap. Price rips above resistance. Retail floods in long, thinking, we're breaking out, only for it to reverse and cascade down. Retail gets stopped out. Institutions scoop it up cheaper. Or the bear trap. Price plunges below support. Retail shorts in a panic, convinced the bottom's falling out, and then the market V-shapes higher, fueled by their stop orders. It's not personal. It's just math. When you're running millions or billions, you need liquidity to enter a position. You find it where the retail stops are, just beyond the obvious lines on the chart. This isn't theoretical. It happens every day. If you've ever had pulled a perfect breakout trade reverse the moment you entered, well, I'm sorry. You've been stop hunted. So if it's rigged, manipulated, and full of traps, why trade gold? Because volatility is opportunity, and gold, unlike most markets, moves every day. It doesn't sit around waiting for an earnings report or some quarterly guidance. It breathes. It pulses. It reacts to everything. Inflation prints, rate whispers, war rumors, DXY jitters, 10-year yields, and occasionally, just the mood of the room. We don't trade everything. We trade gold. Because when you focus on one instrument long enough, you start to see the traps before they're laid. The price action whispers to you. You sense when a candle is real and when it's bait. You stop being lunch and start getting your share. But here's the thing. Gold isn't just any market. It's one of the hardest instruments in the world to master. It moves fast. It fakes out both sides. It responds to signals from 5 different markets at once. It humbles the cocky and rewards only the obsessive, which is why we believe if you can learn to ride the gold bull, you can ride any bull in the rodeo. All it takes is a few adjustments to your saddle. Most retail traders lose because they try to trade everything, chasing action instead of mastering one battlefield. But gold rewards patience. It rewards focus. Every fake breakout, every stop hunt, every trap becomes a lesson, if you're paying attention. Our group doesn't claim perfection. We take hits, but we understand this market. We know what it's capable of, and we know what we're capable of when we stick to the plan. So yes, the gold market is rigged, sharp-edged, and full of people trying to take your money. But that's why it's worth mastering. Not because it's safe, because it's real.